Hey soldiers, those looking to buy homes are finding that in most of America today, homes are absolutely unaffordable for folk that are making below $125,000 a year. But there is hope, and we're going to get into some indications that this market could be turning around, giving people an opportunity to go back in and buy. There are two things that are occurring that lead me to believe that, and we're going to go over those here in just a minute. But it's very troubling how the U.S. standard of living is starting to really decline. And we're seeing that because the United States is spending a lot of money on foreign governments, okay? Seems like when you've got actual veterans being evicted from homes that they've lived in, nursing homes, in favor of people who are not citizens, all right, there's something very wrong. There's also something very, very wrong when you have the United States just saying to its citizens, we're going to continue to tax you so that we can send aid to a foreign government in Eastern Europe. You know the one I'm talking about, right? This is insane, all right? And all of this, everything that we see occurring with most of the policies in the United States today are conspiring to decrease faith in the US dollar. So you think it's challenging now? Well, as we always do, we're going to offer solutions. We want the soldiers of finance to be able to navigate these turbulent waters and come out the other side successful. So yes, it is true that homes are very, very expensive right now. If you're looking to buy a home right now, I feel sorry for you. This is what Michael Snyder is saying. He's written a piece here. He says, the other day when I wrote that life in America has never been more unaffordable than it is right now, some people thought that I was exaggerating, but the truth is that I was not exaggerating one bit. The cost of living has risen to extremely painful levels. Look, guys, we talk about it all the time, right? If you're just talking about eating, all right, God, don't go to a restaurant because they're going to put the price of the food on top of what they need to make in order to show a profit. They're business, right? And I'm not saying don't go out to restaurants. My wife and I went to a restaurant the other night. It was good service. We had a fun time, but it's not something we do every night. That is for doggone sure. So we're seeing the cost of living, rise. Since 2019, the median price of a home in the United States since 2019 has risen by more than $100,000. And thanks to the Federal Reserve, we're now facing dramatically higher interest rates. And of course, that is contributing to the increased price of a home. But keep in mind that interest rate, okay, first chance you get, if you have a mortgage rate that's higher than the prevailing rate because the Fed went in and lowered rates, jump on a refinance. That's the one positive thing about the situation is that interest rate can turn into the variable you need to decrease the cost of housing for you if you have a mortgage. All right, so a new report just released determined that homes are currently, quote, unaffordable in 99% of U.S. counties. The typical American cannot afford to buy a home in a growing number of communities across the nation, according to common lending standards. That's the main takeaway from a new report from real estate data provider ATTOM. Researchers examined the median home prices last year for roughly 575 U.S. counties and found that home prices in 99% of those areas are beyond the reach of the average income earner who makes $71,214 a year. This according to ATTOM. The entire history of our country, in that entire history, we've never seen anything like this before. So we're locking people out and we're putting them in a position where you got to live somewhere, right? So if you don't have a mortgage, then you are renting. And if you are renting, then you are exposed to an annual rent increase. So that's got built-in inflation for you. And the more money you need to devote to that rent, presumably, the less money you have to save for a house, okay? And being able to make a down payment and eventually start on a mortgage of your own, where at least, depending on where you buy, because again, real estate is a hyper-local market, so what's good for the goose in one neighborhood may not be good for the gander in the neighborhood 4 blocks south, all right? But, all things being equal, if you buy right, like you should be focusing on purchasing all of your assets, buying right, then that house is going to appreciate in value over time. It's what we typically see with real estate. You're not going to see any appreciation in value for you on a rent. Some people say, well, I prefer to pay rent because, the mortgage, you don't even own the house. Please, kill that. Because the truth of the matter is, if you pay rent, you are paying a mortgage, just not your mortgage. And you're not getting anything out of it in terms of an appreciation in value. And yes, it is true that it costs money to get a mortgage. Where do you think you're going to go and get someone to extend a loan to you and do it at 0% interest? All right, let's come back to reality, right? And furthermore, if you want to have leverage, so to be able to say put up $20,000 to control $100,000 in real property, then yeah, this is working for you too. So a combination of insanely high home prices and suffocatingly high mortgage rates have literally frozen the housing market. Until something changes, millions of potential buyers and millions of potential sellers will remain sidelined. Housing experts point to a couple of trends driving up housing cost. Mortgage rates have topped 7%, adding hundreds of dollars per month to a potential house payment. At the same time, homeowners who locked in lower mortgage rates during the pandemic have opted not to sell out of fear of having to buy another property at today's elevated rates, depleting the supply of homes for sale. The only people who are selling right now are people who really need to move because of a life event, such as a divorce, marriage, new baby, new job, etc. This is according to Daryl Fairweather, chief economist at Redfin. He told that to CBS Market Watch. So one thing that we're seeing is these interest rates that may, if history is an indicator, fall at some point. Right now, you got a whole generation that knows nothing about a mortgage rate above 6%, okay? And so they think that it's the end of the world. That combined with inflation that's making every other aspect of life expensive, so that debt to income ratio is kind of skewed toward that, and basically the increase in the price of the house. So one thing that people are going to have to get used to is maybe you can't afford as big of a McMansion as you may have if you gotten into the market 5 years ago, and those are the breaks, okay? Yeah, maybe you can't do the single family home with acreage right now. Maybe you can do a single family home on a smaller lot, or maybe you can do a townhome and just get in and start to alleviate pressure from rent inflation and get in on something that is going to build equity for you over time, more than likely. So those are some things that you can consider if you're trying to buy a house. Considering everything that I just shared with you, it should be no surprise that pending home sales in August were 18.7% lower than they were a year ago. And therein lies the other solution. As this housing market gets locked up, you're going to see more inventory come onto the market because people are not selling. And we already went over why they're not selling, because if they sell, they're going to get themselves into a position where now they're exposed to these higher rates. And I would venture to guess that most of the people that are in a position to sell now have a much lower rate because they purchased years ago. All right. So you've got the specter of mortgage rates dropping over time with the Fed's interest rate, with the interest rate the Fed sets, and then you've got more inventory coming onto the market. And you know what happens. It's the old law of supply and demand. When there's more inventory on a market and less demand, then prices start to moderate and then fall. But again, this may not happen in your neck of the woods. If you live somewhere in like LA or New York, you may not see an increased inventory because those are markets with huge populations. And a lot of people want to live in proximity to certain things that Manhattan has in the financial district or in LA, highly populated area. So again, this is all dependent on where you are looking. So that's what's going on in the housing market right now. Just keep in mind, if you pay rent, you definitely are paying a mortgage. You're just paying the mortgage for your landlord and then some because they're making a profit off of you, right? Watch this video here. We're going to give you some more insight into what's going on in the economy and what you can do to stay on the road to financial independence. Guys, I'll talk to you soon.